Hello, my name's Lorraine of District32, and I'm here this afternoon with Bruce Reynolds of Realty. How are you, Bruce?
I'm good, Lorraine. How are you?
I'm very well, thank you. We've just been having a general chat about the lead up to Christmas and the end of year rush for business owners. Few drinks.
It's hectic, isn't it? And it's like it comes every year, but every year it takes us by surprise. You think of it,
yeah,
off within the year, but it's good.
So what we're going to do today is a short interview on our property update, snapshot. So what's happening in the property market, what we should expect, and we know you don't have a crystal ball, but we just love to hear your insights and your opinions into what is happening. So Bruce, I mean, if I gave you an open-ended question there and actually said what's happening in the property market, how would you answer that?
Well, look, in several ways. Probably the big question that's on everyone's lips at the moment is, how is the Perth property market going? And there is, or how is it going to go? So, and again, we don't have crystal balls, but what we do know is we do have a fairly good understanding of what levers are at play at the minute. Interest rates are going to continue to make an effect on the market, and the leverage that the central bank's using there to raise the interest rates is effectively, as we know, to try and slow down inflation. How will that affect the market in the short to medium term? I think Perth it's an interesting place at the minute. So when you look and compare Perth as a capital city to all the other capital cities around Australia, we still are at a sort of a stage where we're approaching the 2014 sort of boom that we had back in 2014. So we went through 2014, and then we went through a slight recess, I guess, in property prices. We didn't really have massive drops, but we had sort of like a stabilisation, and in some, depending on suburbs, of course, some places got hit harder than others. So even through over the last 2 or 3 years, when property prices across the whole country have been moving, compared to the other states, and it's quite bizarre when you consider that we've got almost 0% rental vacancies. So it's a very tightly held set of circumstances where we do have a lot of people still looking for places to rent. So the demand for rentals is high. We've got a situation where we haven't, like you look at Adelaide, Brisbane, and even Hobart, their property prices on average are above Perth. So the value in Perth is still there compared to the other states. Our income per capita in Perth compared to other states is still quite high. Obviously, it's pushed by the mining. So when you look at investment, and again, crystal ball, we don't know, but when you look at affordability and availability, and even with interest rates, it makes us quite affordable compared to other states. So I would have thought, so in Sydney, we've got situations where the reports that are coming out of inflation, the interest rate hike is there's some properties losing value in Sydney quite quickly. And the way that works is ultimately the top end of town in interest rates get hit a little bit harder. So if you were to borrow $1 million, if you were to purchase a property for $1 million 3 years ago, when interest rates were almost historic lows, your borrowing capacity might have been, I don't know, $800,000 if you're using a 20% deposit. Well, now because the interest rates have gone up, that same property, or not the same property, but your same set of circumstances, same income level, same deposit, your borrowing might mean that the bank will only give you $600. So what then that does is the properties that are worth $1 million have less people in the market chasing them because they just physically can't get the lending. Either they stay on the market for longer, or they get reduced in price in some instances, depending on the suburbs. So that's what I think will happen in the short term with the interest rates going up. There will be less capacity for people to borrow more for property. So the middle to lower T's, they won't really be affected in price at all because we know that's affordable compared to other states. Yeah. And people still have the borrowing capacity at that level. It's those who might be extending themselves, looking for properties where they're borrowing, the 800 to $1 million or 1.2 million. Well, they're going to be pulled back a little bit to the market because they just can't get the borrowing that they would have got.
Yeah, okay. I love hearing all this information. I love being able to interview people because it feeds my own curiosity about the market. So would you say then, Bruce, now is a great time to buy property in Perth? We're nowhere near anywhere else in Australia. And are the prices likely to get to the same as, the other states here in Perth, do you think?
Well, yeah, over the long term, property is always going to go up. And then the levers at play that make property go up, supply and demand. So we've got a situation in Perth where we're still quite healthy in that area. So we don't have an oversupply because they're just not gushing onto the market at the moment. I think if you looked at compared to, say, 2 or 3 years ago, we're probably listing across the whole across the whole metro area. There might be 30-40% less properties on the market to buy. So, let's just say, and I don't have the figures at the moment, it might be around about 7,000 or 8,000 properties on the market at the moment. Well, 2 or 3 years ago, there was about 12,000. So again, that's a supply and demand issue where when you've got more properties in the market, obviously, then there's more opportunity for downward pressure on price. So we would find, is it a good time to buy? The old adage is always going to be, the best time to buy property was yesterday. So, that's always going to be the case. If you were to buy property today and had to sell it tomorrow, well, then you're still going to be in a situation where you're going to lose property because your cost of stamp duty and all those sorts of things. So individual circumstances will decide the best thing it is for you to do personally. But we all need roofs over our heads. So, so if you're renting and you're paying $500 a week rent and you've got 20% deposit, then it makes more sense to me if I was if I was talking to one of my children to say, okay, well, why wouldn't you buy? Because you can service that loan, and all you're doing at the moment with renting is wasting that money, property. So individual circumstances are going to dictate where you're at. And then sorry,
I was going to flip it around because you're in real estate, helping people to buy. But is it a good time to sell then? It's always a good time to sell.
Yeah, so part of the reason why there is a restriction in the amount of property on the market is those who are considering selling, they're having issues finding something that want to either upgrade or downgrade because there isn't on the market as there could be. So the flip side to that is you're going to get a good price, but the markets move together. So sometimes you'll go in and appraise a property and someone says, look, the market's booming at the moment, so I want to sell here. And then in the same breath, I want to buy here. Well, it doesn't kind of work like that. So it's kind of together within reason. You can have wins, of course. You can buy well and sell well and do quite well out of that. There's skill in that for those who do that really well. But sometimes when we are appraising properties or selling properties for people, they're unrealistic about where they want the market to be for them when they buy and sell, as opposed to when they're purchasing of someone. So it's interesting how it works. But that's just some people are good at that sort of stuff, and they do get the most out of those opportunities if they're really good at the negotiation side of things.
Yeah. And look, I'm going to interview you again and ask you about some of the case studies.